Hello and welcome all to the second weekly installment of the FreightWaves market update. What we try to do is give you guys a quick snapshot of what we see in the market today using our SONAR platform. We've had a pretty busy week, so let's dig right into it. So I've got for you pulled up on the screen the Cass Freight Index shipments. And what this is basically the higher the amount of shipments there are in the system, the higher the number. The traditional cycle here is, what do you know, freight patterns. They go down in January and then they gradually start increasing into the summer months before they tail off again right after the holidays. So you see here over the past couple of years, I think I have you since 2014, and what you see is the same kind of boring pattern. Well, welcome to 2017. So 2017 has broken through a barrier here. You see January 2018, is actually higher than July of 2017. So we've scaled up effectively starting in 2017, and then 2018 we just broke right through it and we're sitting way high. You don't necessarily need to know what that number means. Just know that it is high in relation to the rest. So I'm going to show you this for a reason. The reason I'm showing you this is to kind of relate it to what we're seeing in the market today. So remember that index went to the end of April. You saw that it scaled right up. Well, look what we see here in the tender rejection index for the country. April actually starts trailing off in tender rejection index. Now I'm showing you this because I want you to understand what tender rejection actually means here. So why would it trail off if shipments were going up? Well, what we typically see is contracts start getting implemented at the end of or in the spring or late winter, early spring cycles. So carriers basically got a big old giant rate increase. They started implementing their contracts. They were happier with the rates. They quit turning down loads and said, you know what, you guys got a big bump, 8 to 10% rate increase. We're going to go ahead and honor that for a little while. So that's what they did throughout the month of April, even though shipments were probably staying high. I think everybody realized the economy was still pumping in April. Tender rejections were not happening with as much frequency. The volumes may have come in not necessarily where they expected, but again, we weren't seeing a slowdown in freight movement, just a slowdown in freight rejections. Well, it looks like starting in May, the carrier started rejecting those loads again. So it only took them a month to figure out, hey man, our capacity is still going haywire. And we reported last week that a lot of that has to do with the produce season and the container volumes coming in from the ports. You know, you got Trump out there trying to put tariffs on everything. So there's probably some activity related to that happening. Right now, we're still sitting in this elevated 24% tender rejection. It's not quite as high as it was in March, but it still looks like it's poised to kind of break on through. What I'm going to do is I'm going to show you specific markets, or one or two markets to give you guys a good idea of what's happening. I'm going to show you the Atlanta market right here. Now, the Atlanta market, quite a volatile market. You see that here in March, it took off for a little bit before calming back down. And then right now we're seeing the highest levels that we've seen all year, 29% rejections. So we think a lot of what's happening here is kind of a trickle down effect. So the carriers that are handling the freight out west, the produce season, the containers, everybody's moving to where the freight is. So they've abandoned the southeast. Not necessarily in its entirely, I'm being a little dramatic, but they have at least moved out of the area. And when freight patterns move, it creates network imbalances. So Atlanta, a big hub for produce and things coming out of Florida, out of Savannah, Charleston, is suffering from a lack of capacity right now as manufacturing starts turning on. Housing starts, I think, started, they're back up again. So a lot of lumber comes out of the Atlanta market. And there's just not the capacity there to handle it right now. And so when we have these, my point here is when we have these events and these network imbalances, it ripples throughout the country. So I'm going to take you next to one of my favorite markets, the Chicago market, and I'm going to show you what we're seeing there. So Chicago has been pretty quiet this year. And right now, you see right over here that their outbound tender rejection index has skyrocketed over the last week. So welcome to the show, Chicago. So it's not necessarily cold. So normally we don't see people handling freight in the Chicago market. It's quite a hub for American freight movements. And what we have over here is the inbound rejection index for Chicago. So people have actually been turning down freight with more frequency at post Memorial Day than you would traditionally see. I'm going to zoom on out here so you can see that back here before Memorial Day, you actually saw this cooling off, and now it's shooting back up again. So it's at some of the highest levels post-holiday that we've seen. And that's probably impacting the outbound tender rejection index, as capacity just isn't there. People are turning down freight going into Chicago, it's very interesting. So basically what we're saying is trucks are out of balance right now. There's a lot of activity going on. The market seems to be just as volatile as it ever was. The economy is still booming. Shippers are shipping. A lot of chances to play the spot market more than likely. So that's what we're seeing this week. And thank you guys for tuning in. Check us out next week.